The crypto market is pulling back, volatility is on the rise, and the main question on everyone's mind here is why? Why is this happening? Well, welcome back to the channel, everyone. My name is Brendan, and I hope all of you are having a fantastic day. And what we're seeing in the crypto markets right now is a pullback across the board. In fact, this actually goes beyond the crypto markets and even into the traditional side of things, as we'll take a look at in today's video. And what we're really seeing at its base level is a pullback across the board of all risk on assets. Now, what I want to do in this video is explain why this is happening and how the markets can turn around from the current point that they're in. This is actually not as bad as it seems to be. I see a lot of people looking at this and overreacting and being like, oh, this could be the start of the next major bear market. But I don't think it's nearly that bad, and I want to explain why that is the case in this video here today. So let's start things off on a positive note here, because what we're seeing out of the country of Japan is that they're going to be dropping their maximum tax rate for Bitcoin and cryptocurrency as a whole from 55%, which is quite hefty, down to 20%. Now, this is a big deal because we've seen more countries in recent years start to ease up on their crypto regulation as they don't want to miss out on this piece of the pie. There's a lot of money involved with the crypto markets, especially for tax purposes. And if you overregulate it or if you overtax it, it tends to push people elsewhere. So with Japan loosening up on this, what this actually does is incentivize people to trade the crypto markets even more. And I think the end goal of everyone that's in the crypto markets is to eventually make as much money as possible and ultimately end up in the top tax bracket of your country. Doesn't matter which country that you're in. And so if you're doing this and you end up in the top tax bracket, you're going to be getting punished less, which is going to be incentivizing people to trade the crypto markets even more. And Japan is quite a large financial market, so this is a big net positive really for the whole world here. Now, what about the catalysts that are making the crypto market kind of fall? And not just the crypto market, also the TradFi market, as we'll see here in just a second. But Bitcoin's down roughly about 4% on the day. Over the course of this week, we've seen it drop from around $60,000 over here all the way down to its current low of just at the top of 53K, right at the bottom of 54K. So Bitcoin's down about 4% on the day. If we take a look at NASDAQ, this has not been seeing a great week either. NASDAQ has dropped from around 19,700 down to 18,400. It's also down about 2.6% on the day. S&P is in the same boat. This thing has been getting wrecked off the highs from around 5,600 all the way down to around 5,400. And you're starting to get the picture here, is that it's not just the crypto markets that are getting hit, because the catalysts stretch to more of a broader scale. Really what this is all risk on assets are starting to pull back a little bit. And one of the big reasons for this is, as we've seen from this article right in front of us, is that, well, Fed Governor Waller is backing this idea that Jerome Powell has been talking about, leading to an interest rate cut in September. Now, people are a little bit nervous about this because historically speaking, when the rate cuts start, it tends to cause a pullback in the risk on markets, meaning that doesn't matter if it's stocks, indices, crypto, that is where people start to pull back a little bit here. So people are a little bit nervous about these rate cuts, even though they can lead to one of the best buying opportunities that we have seen in a very long time. People are just a little bit nervous about the short term, not the midterm, not the long term, saying, hey, in the short term here, there's a little bit of uncertainty. Now, another thing that we've seen here is unemployment data, kind of feeding into why a rate cut would happen in the first place. But people were nervous about inflation. They were nervous about PMI. They were nervous about unemployment data in the US. And there's a couple of these different factors that are causing people to be a little bit more risk off with where they're putting their money, i.e., cryptos, stock market, etc. So when we're looking at the crypto market, we have to understand that nothing is going wrong here. Actually, it's quite the opposite. The crypto markets are seeing quite a bit of fundamental news. It's just one of those times where there's just a little bit of uncertainty and people are waiting to see what happens. They want to see what's going to happen in the election. They want to see what's going to happen with inflation. They want to see what's going to happen with interest rate cuts. They want to see what's going to happen with unemployment data. They want to see what's going to happen with all these crazy things that are happening in the world. And they're saying, hey, maybe we can just sit on our hands. Maybe we can take some profits, wait for this to pass over. And a lot of people don't know, but September is actually the worst month for the crypto markets in the short term. Now, I promise there's a good turnaround point from this, but what we actually see is that the average return rate, and I'll try to flash up a picture on the screen here, but the average return rate for September is negative 5.9%. And 7 out of the last 10 Septembers have all resulted in red months. 3 of them were green, 7 of them were red, which leads to that negative 5.9% annual return rate over the last 10 years, making September the worst month that we see. Now, the thing that comes out of this is the turnaround point. Well, if September is the worst month, what we actually see is that October is the best month because the dump that happens in September leads to the most bullish month, which is October. Because what people are doing is saying, hey, if we get the dip that we take from September, we actually tend to recover off of that into the most bullish month, which I think is around, again, we'll put it on the screen, but it's going to be around plus 25% or something like that. And so we go from the worst month leading to the best possible dip opportunity and then the best month happening right afterwards, but it's only the best month for the people who bought the dip. So this isn't all bad news because what we're seeing out of this is that, is there some uncertainty in the short term? Are prices falling? Are people maybe a little bit nervous? Yes. But what comes out of this could very well be, and historically speaking, it has been one of the best buying opportunities for the crypto markets, which I think is a really cool thing. This is just another article talking about this, saying, hey, unemployment rates are falling, but hiring is slowing, just more uncertainty in the markets. And when we actually look at the crypto markets here, we are at an area of extreme fear. And as the Wolf of Wall Street said, this is a bottom signal. And not only is this a bottom signal, but there's bottom signals happening everywhere. I see people in the comments that are talking about the Dixie or the DXY. And this is something that has historically been inversely correlated to the crypto market. So if this falls, that typically means that the crypto markets skyrocket, specifically Bitcoin skyrockets in terms of price. And if we zoom out on this, we can see that this thing is playing with fire. If the Dixie falls beneath this huge support zone at 100, right over here, we're barely above 101 at the moment. If this breaks this level that it has been trying to hold for years now, about 2 years, then this could mean a deeper breakdown of the DXY or the Dixie, which stands for the US dollar currency index. And if that happens, it would likely result in positive potential for the crypto markets moving forward. So there's all these catalysts, there's all these things at play. And although the short term looks a little bit uncertain, if we do dip even a little bit further down on things like the Bitcoin chart, then what we could actually see stem out of this is Bitcoin testing its primary support in the low 50s and potentially even finding a bottom down there. So again, is there some uncertainty in the short term? Yeah, but look at the mid to long term here. We have a saying that we like to go over, and that's when in doubt, zoom out. And I think that really needs to be the slogan of where we're at right now. And we don't have to overtrade the markets. We don't have to capitalize on every single little opportunity, but when in doubt, zoom out. And when we start to zoom out, when we start to see the bigger picture, we start to realize that the crypto markets really aren't in that bad of a spot. In fact, they're actually in quite a good spot. What we're seeing is that we retested our previous all-time high up here. This is where we're currently consolidating. And on top of this, we are bouncing off the top of our previous consolidation range. I mean, you can see in the last quarter of 2023, crypto was consolidating towards the very top of 40K, very bottom of 50K. And that same top is now acting as our current bottom, where we're seeing a lot of the buyers be comfortable. So when we're looking at market structure, this isn't really a bad case scenario. In fact, it actually looks quite good. Even if we can go a little bit deeper in the short term, we're looking towards like the high 40s, low 50s and saying, hey, there's a ton of support that should be down here. And that could be an area to capitalize on the crypto markets moving forward. So there's a lot of stuff happening, everyone. And again, I want to just echo that slogan that we were saying of when in doubt, zoom out, because the crypto markets, as we do zoom out, actually begin to look a lot better. And with this, we're seeing a lot of positive stuff happen and a lot of potential bottom signals as well, whether it's the fear and greed index, whether it's the candle charts, whether it's some other things like the RSI and the MACD painting some of these higher lows that we've been seeing on the daily chart over here as well. there's a lot of stuff going on. We're seeing crypto tax rates drop. We're seeing crypto become more accepted on a political spectrum, especially in the US elections. And there's a lot of positive things that are happening. So that is going to wrap us up for this week's market update. If you all like the market update that we put out, quick reminder that we do these every single week. We also have other content going live on the Crypto 101 podcast YouTube channel, like video tutorials, podcasts, interviews, you name it, market updates. We have all sorts of other great content that's going up there as well. And if you really like the material and you want to get plugged into a killer crypto community, well, go ahead and check the links in the description down below. You can get plugged in over there. We have a really great community called Crypt Nation where we'd love to see all of you. So that's going to wrap us up. I hope all of you have a fantastic weekend, and we're going to see all of you at the same time, same place next week.